Welcome back to Digitalizatio, where we explore Bitcoin, macroeconomics, and the future of money. Let's start with what Dan Morehead, the founder of Pantera Capital, said. Macro assets are those that institutional investors use to express a view on the global economy. Assets like bonds, equities, commodities, and currencies. In other words, a macro asset is not just something that goes up in price. It's a tool investors use to position themselves based on inflation, interest rates, geopolitical risk, monetary policy, and more. For decades, macro investors use things like gold to hedge against inflation, the dollar to express confidence in U.S. strength, or treasuries to bet on interest rate cycles. But now, there's a new player in town. Over the past decade, Bitcoin has gone from a fringe experiment to a multi-trillion-dollar asset class. But is it being used like a macro asset?
Yeah, I would say it's any kind of big picture commodity, stock index, currency, or asymmetric asset like Bitcoin, and that's why I originally got excited about it. It's got properties that you just don't find in any other typical asset class. And I think in 10 years, everyone will have a Bitcoin team, blockchain team. It'll be a normal asset class. We're in this kind of uncomfortable period where we transition into that.
Let's look at the evidence. Institutional adoption: BlackRock, Fidelity, and Franklin Templeton have all launched Bitcoin ETFs. That's not just retail excitement. That's deep integration into Wall Street infrastructure. Macro narratives: Bitcoin is increasingly being treated as digital gold. Institutions are using it to hedge against inflation, currency debasement, and even geopolitical instability. Exactly how macro investors use commodities. Correlation trends during macro shocks, like banking crises or inflation scares. Bitcoin now often reacts like other risk-on or safe haven assets. That shows it's being watched by traders and funds through a macro lens. Balance sheets. We've seen Bitcoin appear on corporate balance sheets, sovereign wealth funds are sniffing around, and even pension funds are exploring small allocations.
A smaller asset will not move based on shifts in liquidity, but larger assets do. So I think, 5, 6, 7 years ago, I would not have said Bitcoin was a macro asset. I think today that it is.
Is Bitcoin a macro asset? Technically, yes, it's starting to be used that way, but it's not fully matured yet. The volatility is still high. The liquidity is growing, but not yet at the level of major Forex pairs or treasuries. And while institutional adoption is increasing, it's still early innings. But directionally, the trend is clear. Bitcoin is evolving from a speculative, retail-driven asset into a macro tool that can sit alongside gold, equities, and sovereign debt. Not replace them, but complement them. In Dan Morehead's terms, Bitcoin is becoming the first new macro asset class in over a century. So, is Bitcoin an institutional macro asset? Not completely, but it's well on its way, and the institutions, they're already here.
And it's starting to happen. There's some strange things happening in policy that are driving people to sell fiat currencies. In the US, the deficit seems unsustainable. I don't know where it goes. And so if you're looking to store your wealth in something that can't be confiscated either directly or indirectly via inflation, Bitcoin is a fantastic asset. So I think its time is now.
Bitcoin is undervalued. That's the feeling I keep coming back to, especially with everything happening in the world right now. But here's the thing. Institutions agree, and yet they've barely scratched the surface. So what's the holdup? Let's break it down. Before we talk about Bitcoin, let's define what a macro asset is. Dan Morehead, founder of Pantera Capital, puts it simply: macro assets are tools that institutions use to express a view on the world, whether it's inflation, interest rates, or global stability. Think gold, bonds, oil, or the US dollar. These aren't just investments, they're statements. And Bitcoin? It's increasingly being used in that exact way. That's the real friction point. Bitcoin's market cap, hovering around $2 trillion now, is just beginning to enter the territory where mega funds, pensions, and sovereign wealth can participate at scale. For most of the past decade, it was just too small.
Bitcoin is undervalued. So I think I'm constantly surprised that it's as low as it is with the backdrop. But yeah, clearly institutions have difficulty investing in a small asset. They need to deploy large amounts of capital. So it's 2 trillion. Bitcoin is getting into that league. So that's a more recent phenomena.
These funds can't move billions into something illiquid or volatile without moving the market. But that's starting to change. Here's what's different today. Bitcoin ETFs, BlackRock, Fidelity, and others didn't launch ETFs for fun. These are pipelines for institutional money, and flows are growing macro environment. With inflation sticky, debt at record levels, and fiat currencies under pressure, Bitcoin's fixed supply narrative is hitting harder than ever. Size matters. At $2 trillion, Bitcoin is now big enough for institutions to take seriously. It's starting to resemble a macro-capable asset, not just a tech curiosity perception shift. Bitcoin is no longer just digital gold. It's increasingly seen as neutral collateral, a censorship-resistant base layer, and a hedge against systemic risk. So yeah, I'm surprised Bitcoin's still this low, especially given the macro backdrop. But the infrastructure is forming, and the capital is circling. Is Bitcoin a macro asset? It's on the edge, and we're watching the transition happen in real time. From retail speculation to institutional positioning, from misunderstood volatility to long-term allocatio, from niche to necessity. The revaluation hasn't fully happened yet, but when it does, I believe people will look back and say Bitcoin was wildly undervalued at $2 trillion.
You know, I came at this Bitcoin from the gold space. One of the few guys that's actually, super pro gold and pro Bitcoin. And from the physical gold space.
And nobody pays with gold today, but it is still widely owned.
We won't talk about gold today. But the bottom line is, I really have always believed in that physical ownership.
I came into Bitcoin from the gold space. One of the few people who's genuinely pro-gold and pro-Bitcoin. I've worked with physical gold. I understand its value, its history, its role in the system. And when I saw Bitcoin, I didn't see a threat to gold. I saw the evolution of the same idea. Sound money, scarcity, sovereignty. Only this time, it's digital, portable, and programmable. So when people ask, is Bitcoin a macro asset? My answer is simple. It's becoming one. And just like gold, the world is going to wake up to it. Slowly at first, then suddenly. If that resonates with you, hit like, subscribe, and leave a comment below. Do you think gold and Bitcoin can coexist, or will one eventually dominate? Thanks for being here, and I'll see you in the next one.